Hey guys, welcome back to a brand new video. I'm RexFinance, and today we're going to be talking about my top 3 stock picks for the month of October. September all but flew by. I don't know where that month went, but it was a very volatile, very vicious month of investing, especially for clean energy and electric vehicle companies. This has been a series I have done on my channel ever since I started it in late April. And as always, before we get into the picks for October, I'm going to be going over my picks that I made for the month of September and how they performed throughout the month. So I should also say I am a long-term investor with hopes for short-term gain. I never look at the performance of a stock over a 1-month period. I don't believe it's healthy. I don't believe it is a very good way to invest at all. But for the sake of the video, for the sake of the viewership, we're going to do it, and we're going to see how I performed in the month of September. But lastly, I know there's a lot of disclaimers, but I just got to say it. I am not a financial advisor. I am a retail investor hoping to make a profit, just like you guys watching this video. So make sure you do your research outside of watching this video on these companies I'm about to present to you. So with the September stocks video, I set a goal to hit 10,000 views and 700 likes. Both goals we blew out of the water, and I'm extremely grateful for that, and I'm extremely blessed by all of you guys that choose to watch and like my videos. However, we're going to up the ante for this month's video for October stock picks. We're going to go for over 13,000 views and 800 likes. The first stock pick I made at the beginning of the September video was FLUX Power. I originally recommended buying FLUX Power on my channel when it was around $5 a share. I personally still own 1,000 shares of Flux at a cost of $5. During the September video though, the stock price was at $6 a share already. However, we still saw success and profits in the month of September with our investment in FLUX Power. Right now, we're sitting in the upper $6 range, almost at $7. And just 2 days ago, FLUX Power topped $8 a share after blowing away their earnings report, which is exactly what I thought they would do. As I mentioned, I still own 1,000 shares of FLUX Power, and I have no plans on selling these shares anytime soon. The second pick I made in the month of September was One Stop Systems. I originally recommended One Stop on my channel at around $2.10 a share, but it was already at $2.54 a share by the time I made the September stocks to buy video. We took the L on this recommendation, sadly, because OSS went back down to the low $2 range, and I have personally never bought shares of OSS, but I am going to, especially if we hit $2 a share. And the third and final pick we had for the month of September was Golden Nugget Gaming, which is a SPAC play with Landcadia Holdings, ticker symbol LCA. I originally recommended LCA on my channel at around $12 a share, and at one point in the month of September, we topped $18 a share. However, towards the end of this month, we've seen a downturn in the stock price, and we're below $15 a share. So again, we took an L technically, even though we were having great success throughout the month. And I still hold my 10 contracts of Golden Nugget Gaming, and I plan on exercising those options if the share price complies. And to be honest with you, my 3 picks for September were pretty lackluster compared to what we're used to presenting on my channel. Lots of you that watch my videos regularly are used to seeing me pick stocks that go up 50% plus over a month or two span. But I will say we fought pretty tough market conditions in the month of September. The whole Nikola fraud hurt all SPAC plays and even growth stories as a side. And on top of that, the overhyping of Tesla Battery Day also did not help any of my clean energy stocks. But excuses aside, we are going to dig deep this month, and hopefully we're going to return to the awesome returns that I have presented historically on my channel. So my first pick of October is a company that is hot off the press in the world of SPACs. Now, September was a pretty rough month for SPACs after the Nikola fraud came out. The Tesla Battery Day was overhyped and was really kind of a letdown for the markets, especially electric vehicle stocks. But ChargePoint is in that market. ChargePoint is heavily focused on the charging infrastructure for electric vehicles. Now, historically, I haven't recommended any EV charging companies on my channel, and I haven't invested in any personally, and that is for good reason. But I see ChargePoint as a great opportunity, and it's really what I've been looking for in an electric vehicle charging company. Many of the other charging companies out there that are publicly traded were more focused on charging stations, which I personally don't believe is going to be the future of charging your electric vehicle. I don't think people are going to be patient enough to wait and sit for their vehicle to be charged. On top of that, fast charging of batteries degrades the battery and decreases the efficiency and storage capacity of the battery just like it does in your iPhone. So for that reason, I don't believe that fast charging or charging stations is really the future for charging your electric vehicles. What I believe is that people are going to be charging their vehicles either during the day at work or at home overnight in anticipation of the next day. And ChargePoint is heavily focused on both of those two markets. And in fact, if you guys didn't know, I pre-ordered a Lordstown Endurance, which is going to be the first full-sized electric work truck. I pre-ordered this, but I don't have a charger installed. So I'm going to be going to ChargePoint to install my home charger so that I can charge my truck overnight or during the day when I am not using it at home. ChargePoint is an early mover in the charging infrastructure of the electric vehicle industry, which is big. That's something I have continuously talked about on my channel. If you want to identify a growth company, you need to find a company that is the early mover, they have a niche or a moat in their particular industry, and they're quickly developing a monopoly in that niche. The charging infrastructure is set to be a $200 billion industry by the year 2030. So just over 9 years from now, this entire industry is going to be worth $200 billion. And ChargePoint being the early mover in this industry, especially for home charging or charging at work, that in itself is setting ChargePoint up to get a dominant market share, which they already have in this $200 billion industry within 9 years. On top of this, ChargePoint has the hardware, software, and services business model that I love. If you guys are active viewers on this channel, you know that one of my favorite stocks that I own is CleanSpark, and they have this business model. It creates 3 different revenue streams, one up front with the hardware, and then 2 reoccurring with the software and services. Having 3 different revenue streams is just like me having 3 different income streams. It diversifies things and allows you to capitalize on different opportunities. The hardware purchase, like I'm going to make for my at-home charger, is what gets customers in the door. From there, they start using the software, and then they start using the services. Now, there are some risks with investing in ChargePoint right now. Currently, already they are valued at over $3 billion as a company. Now, the reason that is risky is because they only had $135 million in revenue. So you're paying a valuation of $3 billion for a company that did $135 million in revenue. The current valuation is pretty clearly betting on the projected revenue growth to come to fruition over time. Now, even though they only had $135 million in revenue this fiscal year, they're set to see $2 billion in revenue by the year 2026. So, if you believe in the future of electric vehicles, there's really nothing you should be worried about when investing in ChargePoint. Just know that it's a long-term investment. There could be ups and downs with the valuation being so high right now. But you know in 2026, if the revenue projections come to fruition, you're going to be a winner and you're going to make a lot of money. So I would not suggest investing in ChargePoint if you're a short-minded investor or invest with your emotions and can't help it. But if you want to invest in ChargePoint because you believe in the future of the EV industry, absolutely invest at the current valuation and hold tightly to those shares, especially if the projected revenue actually comes to be. Now, some other risks, like I just talked about, ChargePoint is entirely dependent on the electric vehicle industry. If for some reason the EV industry would collapse or wouldn't go through, or the industry growth isn't as high as it's projected to be, all of those things present risks to ChargePoint, and if any of those things would happen, if the EV industry wouldn't perform up to investor standards, you would ultimately see a downturn in the share price of ChargePoint. On top of this, their margins have decreased in 2 years from 38% down to 12%. Now that margin percentage could continue to fall until their product releases stabilize and their software revenue grows and catches up. Like I said, the hardware right now, which is primarily their main revenue builder right now, is just the way to get the customers in the door. The real revenue growth, how you're going to grow the margins here, is if you convert those hardware users to being software and services users. So ChargePoint is purely a high growth, speculative play. But like I've mentioned previously, if you believe in the future of electric vehicles and the industry as a whole, there's no reason you should be worried about investing in ChargePoint at the current valuation. But again, I would reiterate, make sure you are a long-term minded investor if you want to invest in this company. And I'll have a more in-depth video coming out on ChargePoint in the near future, so stay tuned for that and make sure you guys subscribe so you don't miss that. Because this is a video focused on 3 different companies and my picks for a certain given month, I'm not going to go into a whole lot of detail surrounding these companies, but I hope what I've provided for you today surrounding ChargePoint has been enough to gain a basic understanding about the company and what we really need to see from this company going forward. So stock pick number 2 is Revolve Group. Revolve used to be a main show on my channel, meaning I used to talk about Revolve quite a bit on my channel. I bought into Revolve originally around $9 a share, and then I sold at $18 a share. Revolve is heavily focused on high-end clothing for women in particular. Revolve is recovering much better than expected from the virus. Because they're particularly focused on high-end clothing, lots of people thought that their business would see a big downturn with the virus that came in March. However, Revolve has shown the adaptability and flexibility of its business model in lowering their costs or other business segments taking off and growing at alarming rates. Their net income, their EBITDA has all improved year over year despite the downturn in March because of the virus. In addition to this, Revolve was featured on the previous season of The Bachelor, which they received lots of new customers for. And historically with Revolve, once they get customers in the door, once they've placed their first order, that isn't their only order that they ever place with the company. Lots of Revolve's customers come back a second, third, fourth time to place new orders for new clothing. On top of this, Revolve uses a very, very powerful advertisement and marketing strategy using influencers. Revolve is expanding drastically internationally away from the United States of America. Now, the market in the USA continues to rise, and they're continuing to see more demand from customers in America. But as they grow their business, they're growing it overseas in addition to their business in America. And because it is primarily an online retailer, it's very easy to expand your business to new markets overseas. And I'll personally say it for you guys out there, I have never understood why women spend so much on their clothing. But I'm not arguing or complaining about it in this case because Revolve makes money from it and they have a very successful business model. And after Revolve blew away Q2 estimates, meaning earnings per share and revenue numbers, their stock skyrocketed that day over $23 a share. However, today we're in the mid $16 per share. And currently that would mean I am paying a $1 billion valuation for a company that did over $600 million in revenue in the previous fiscal year. And that revenue number is only set to grow year over year. So this is a very, very big value and growth play for me personally. I don't expect to double my money in this quickly like I have with CleanSpark or Workhorse or other companies I featured on my channel. But over time, I see this as just a very, very safe investment at a very cheap valuation right now, which is only a company that's growing. Also, Revolve has zero debt on their balance sheet outside of their credit revolver, which most public companies have. So this really isn't that exciting of a company. They don't really do anything disruptive in their industry. They're just a very solid growth company right now with a cheap valuation. And my personal buy target or buy price for this company is in the low 16s, which is where we're getting to as I'm speaking now. So don't be surprised if I come out and buy, 1,000 shares of Revolve Group as time goes on, especially if the stock price continues to fall. So my last but not least pick for the month of October is a company that doesn't seem that exciting on paper because it's Sirius XM. I've talked briefly about this company on my channel, but I would encourage you guys, even if that name doesn't sound very exciting to you, to listen to what I'm about to say. I've historically used Sirius XM as kind of a bank account for my uninvested cash. They have provided profits for investors for 11 years straight. Now, their stock price hasn't grown exponentially over time, but it's been a steady grinder over time. However, just recently, the CEO, Jim Meyer, announced that he would be stepping down and retiring at the end of this calendar year. That sent shares of Sirius XM down by over 20%. So Sirius XM right now in the low $5 per share is really just a value and on the side a growth play for me, just like Revolve is. Sirius XM isn't just the XM business. If you didn't know, they actually own Pandora and they are acquiring Stitcher, and they have a minority investment in SoundCloud. Now, the reason I really like this company going forward, especially in volatile times surrounding the election, is that it provides a very, very steady business model. The XM radio side of their business provides the backbone of the company. They're slowly growing their subscriber numbers, but that revenue stream is always going to be there, and it's going to be growing just steadily and slowly over time. But where the real growth comes in is through the Pandora business. Pandora side serves as the revenue booster, especially as ad rates continue to recover from the March downturn. Pandora Radio has released Uninterrupted Radio, which is exclusive to their platform, where specific athletes for NBA teams or NFL teams make playlists or create a radio station for listeners to listen to for tip-off, at halftime, after the game, and stuff like that. And I personally think this Uninterrupted Radio is a great promotional campaign. They've had several overlays during NBA games, during NFL games, which has shown to be working for Pandora. They've seen decreasing listener hours overall, but if we go to the website analytics, we can see that website traffic is up almost 20% in the past month for Pandora. So next, the Stitcher acquisition that SiriusXM is going to make. That gives them exposure to the podcast market, which is a very fast-growing and preferred way of audio intake for consumers. Lastly was SoundCloud. They have a $75 million investment in SoundCloud, which is a minority stake. SiriusXM did a very similar thing with Pandora before they acquired them outright. And SoundCloud is really an up-and-coming audio platform for rappers or new musicians that want to make a name for themselves. Juice WRLD, for example, made his way off of the SoundCloud platform. So I personally believe SiriusXM is eventually going to acquire 100% of SoundCloud, which is just going to be another growing segment of their business model. And I personally believe I'm getting a bargain of a deal at these prices for SiriusXM stock. So in closing, I just want to review, I am not a financial advisor. Make sure you guys do research on these companies outside of just watching this video. Leave a like if you guys enjoyed. Make sure you comment down below your stock picks for the month of October. I would love to hear that. On top of that, if you guys are new or returning and not yet subscribed, hit the subscribe button down below. In addition, feel free to check out the members only Discord by hitting the join button, which is located right next to the subscribe button. So today we talked about ChargePoint, Revolve Group, and Sirius XM as my 3 picks for October. A month from now, I will go over the performance of these stocks and give my next stock picks for the month of November. So with that, guys, have a great rest of your day, have a great Thursday, and I'll be back on Friday with a brand new video. Peace out.